Good afternoon, everybody. How we all doing? Should be live on YouTube, live on the virtual trading floor. Um, Hopefully no echoes in YouTube. Last time I was on this computer, there was an echo. 1 second, I just want to pull something up. All right. What's up, everybody? What's up, Ben? Good afternoon, BJ, Min. What's up, Pete? Hey, Judy. Yeah, not a bad day. Made a couple bucks. Not a fantastic day either for how much the market was up and the fact that I was 100% long coming into today. I feel like I should have made more money today, but there's no shouldas in trading. What's up, Steve? I totally missed that Microsoft also, Brendan. Pat got the news in there. I was getting ready to step out to get some lunch and just totally flubbed on that one. Clearly was very significant news, and Pat got into the VTF relatively early. So it was right there for anyone to be able to grab. What's up, Ben? Yeah, yeah, I totally missed Microsoft today. So it was an average day. Made a few bucks though. Yeah, 347. Nice. All right, I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I got out of Roblox. I got out of Bank of America. I got out of. I thought there was one more I got out of. Can't remember what it was. I got into and out of Amazon. I remember that. I got into T Triple Q. Pretty light. Still pretty light. Pretty light to the long side, and I've even got a little short on here. So let's take a look at this market. It was a really solid day, really strong breath. Even though it just felt like, for whatever reason, look, IWM was strong, RSP was strong. Obviously, SPY was stronger than RSP because of Microsoft. The Qs were super strong. It did seem like at one point when Microsoft was taking off that it was like the only stock in the market that at that time was still moving higher, and it helped give the spies and the Qs another leg. It was just seemed like my swings that I'm in, a lot of them just weren't really cooperating, which it just is what it is. Happens to me. That's one of actually the more frustrating things is when the market has a big up day and you've got swings on, there's nothing you can really do about it, and they just don't participate. And the flip side is also true. One of like the best things is if the market is weak, it's not doing much, it's going sideways, it's even negative, and you've got swings on that have you positive on the day is a pretty good feeling. So for whatever reason, a lot of my swings weren't really participating today, but still managed to eke out a few dollars for myself. My day trading was just okay. I don't know what's been up. I feel like the last maybe week or so, my intraday trading just hasn't been as good. So I gotta tighten that up. I gotta tighten that up. I gotta figure it out. Um, I haven't been losing money, but I haven't really been getting the results that I want with it. I think my day trading today, all in all, ended up like slightly positive, like really nothing to write home about. And my swings slightly positive, and it just made for a little bit of a green day. But again, nothing phenomenal. Yeah, Microsoft was really the move of the day if you caught it. But let's start with the indices like we usually do. Big upside day today. SPY's up 0.7%, Q's up 0.7%, IWM up 1.25%. Really solid. The Russell was super relatively strong this morning, and that got me a little bit excited. Starting with the SPY's with a little bit of a gap down this morning, and the market had this beautiful intraday upside grind throughout the day. The Qs were very weak off the open, and pretty much all of big tech was really weak off the open as well. It's funny. I actually had Microsoft on my list as a long on my list versus yesterday's low. Did that break? 342.20. What's today's low? 342.17. Oh man. So if anybody took one of my ideas from the meeting this morning, which was to go long Microsoft, I just went to the daily chart versus yesterday's low. I didn't get involved because immediately you could tell that all of big tech was weak and it would have shaken you out by 3 cents. Then of course the news hits and it rips to the roof. There's nothing you can really do about that. You don't know what's coming out in advance. But you could just see here at the very beginning of the day, the Qs are relatively weak. Apple was doing absolutely nothing. Amazon started with this real big red bar, was very weak. Meta was doing nothing. Microsoft, which I had on my list, did nothing in the beginning of the day, was relatively weak. Tesla was relatively weak. And the IWM ripped off the open. And again, broadly, this is what we want if you're bullish. This is still this broader bullish rotation that we've constantly seen. I've been talking about it for months because it just keeps being a theme here. Whenever one index gets too extended, it rests and the other one goes. That just happened back here, starting on like the 12th. The IWM was very extended compared to the Qs. The IWM rested for 3 days. The Qs kind of took off, and the Qs eventually then got extended as of 2 trading sessions ago. That turned into a rest day. Yesterday turned into a rest day. I want to go back to that daily chart in a second because it's really important. And the IWM was relatively weak at the end of last week. Really weak day on Friday. Retested 190, which was a key level. We discussed a IWM long versus 190. I didn't get any stock. I was being a little bit cheap on price. I didn't get anything. ADMA caught up to that pivot. And then at the end of last week, you got the Qs with some outsized extension and the IWM basically touching the ADMA on the daily chart. And the last 2 days, the IWM really took over. So I think the Qs haven't participated. The Qs had a decent day yesterday. They had a pretty good day today, especially with the help of that Microsoft news. But nothing compared to, it's obviously a false print there on my IWM chart, but nothing compared to the relative strength in the IWM, which was broadly really good for breadth. And again, all of this is really bullish. You can't look at the technicals in the market right now and say they're not bullish. You just can't do it. IWM with a really big day two today. If we get a day three tomorrow, let me get an IWM print to fix my chart. Somebody put some stock. Um, if we get a day three tomorrow, the IWM might start looking to the upside also. Almost all of our indices are starting to get there. Going back over the Qs. First thing I would note is after Friday, we had a shooting star, right? It was a day four push through failure. I shorted on Friday. I shorted the Qs on Friday, but I got out into the close. I was very much not greedy with my trade just because I'm recognizing that the market is really strong. But the trade was basically 4 days to the upside. We had gotten at highs to just about $10 of extension away from the ADMA, which has been a very consistent signal to put on at least some short-term shorts or to pair out of your long positions. So took a little bit of a short trade that day. And I cleared out at the close. I didn't want to keep the exposure over the weekend, especially with how strong the market was. But I genuinely felt that I was leaving money on the table by not keeping that QQQ short over the weekend. I just didn't want to deal with it. It was a Friday, weekend was coming up. I liked the fact that my positioning overall was very light, and I was like, I didn't really need this as a hedge. I'm up money on it intraday. Let me just close out the position because come Monday morning, after getting this push through failure on Friday, what I said was the highest probability situation right now in the very small time frame is a continued pull to the ADMA on the daily chart. Probably, better than a 50, 60%. Ugh, are we having that problem again? On this computer? I just don't understand why that happens. Um, I just gotta push through. I'm gonna lose my mind. Maybe the YouTube sounds better. You might want to try the YouTube and see if that sounds better. Uh, Here's a link to it. If anybody wants to try to use that sound. Stop eating the microphone. I'm not eating the microphone. I did just scarf down some second lunch in the 10 minutes between the market closed and the afternoon meeting. street meat guy outside gave me some massive portion. It was like ridiculous. But anyway, that's neither here nor there. Okay. Really? Private, private YouTube. Anyway, what I saw on Monday morning after the shooting star came in on the daily chart here was that there was greater than a 50% chance, probably 60% plus probability of getting a pull right down to the 80 MA off of that. So when I closed out my short on Friday into the close, I genuinely thought that I was leaving money on the table, but I was fine with it. What I also said on Monday morning was it's really much lower probability, but in the event that we break this shooting star high, like relatively quickly within a day or two, it's actually extremely bullish. Because what does this candle mean? This candle here on the 14th. What does the high of this tail mean? The high of this tail represents a spot where sellers took control from buyers. Sellers took control from buyers at the high of this tail. Therefore, there should be some sort of pull-in, some sort of follow-through from the sellers which have gained control. Obviously, we know big picture here, we're in an uptrend, so buyers are in control. But really what an uptrend means is buyers and sellers, they continue to take control from each other at various points, but buyers take back control from sellers at ever higher prices, right? If it was only buyers present, you wouldn't have an uptrend, you would only have up, right? I mean, we could do a quick analysis going back to May, right? So the market broke out of like $325 here for the Qs. Buyers are in control. You get a high on the 22nd at 338.67. That's the spot where sellers take control from buyers. They drive it down into the equilibrium zone. That's the low where buyers take control from sellers. It's called a pivot point, a pivot low. It's also called an inflection point. Buyers regain control at that higher price, drive it up to new highs over a great 3-4 day move. On the 30th, we get a high. We get a little bit too extended. Wouldn't be surprised if we called for a short on that day as well. We get a little bit too extended, and sellers come in and they take control at 353.93. We get like a 1 day pullback followed by a kind of a time correction. Buyers come back in. This is a pivot low. This is a pivot high. This is a pivot low. This is a pivot high. Again, these pivots are the specific points where sellers take control from buyers and buyers take control from sellers. This pivot high we called for this year. We called for the deeper pullback on that one. We were perfectly accurate for the retest of we literally said at 370 that pullback to 357.50 makes sense. The low is 357.59. You don't get any better than that. Also that deeper correction, buyers take control again, but they couldn't push to new highs. People were frowning that this could have been a double top, especially if you look at the SPYs. I disagreed with it. I thought there was just a big move off this low. We needed another higher low for the break. That's exactly what we got. So pivot high, pull back, buyers take control. We reprior, and again, that just leads to I'm really just reviewing this simple price action so everyone understands how things are formed. That an uptrend is a pattern of higher highs and higher lows, but that's marked by periods of time in which sellers take control from buyers and buyers take control from sellers. This candle here, this sort of candle, if you do candlestick analysis, it's called a shooting star candle. It's defined by an upside tail. And again, this was like an RDR also because we closed below this high, but it's defined by this upside tail where you close pretty much at lows with a small body. Especially what you do. When you have that, especially when there's upside extension, and at highs there, we had gotten to that $10 of extension from the ADMA, there is a good chance that the sellers, which regain control there, drive down with some follow through. And that's what we've seen in every other top. And that's the highest probability situation. Get extended, get the pullback, get extended, get the pullback. It's never really just been like one day where we had real extension. Like obviously this is a doji, but there's not real extension. This is a doji, but there's not real extension. Here we had major extension. It lasts for more than one day, the pullback. This is a really impressive one last Friday because for the first time we had the right degree of extension. We had the RDR, we had the push through failure, we had the shooting star candlestick, and we closed weak, and we got zero follow through on that the next day. And that's what I was saying in the morning meeting. on the Monday was, look, we're higher probability of getting a deeper pullback, but in the event that you clear this high, what does it mean? It means that the long sellers or the short sellers that came in and tried to regain control on Friday very quickly getting pushed out of their positions. And that can lead to a pretty, rapid continuation. It's extremely bullish when you see that happen. So all signs here, all technical signs on this market are just are just as bullish as they can be. I mean, we can't even pull back off a shooting star candle when you've got $10 of extension on the Qs for more than a half a day as of last Friday. Another, bullish sign that I keep talking about is that rotation, right? Every time the Qs get extended, they break and the IWM goes. The IWM gets extended, they take a break. The Qs go. I mean, it's just like, it's an incredibly bullish market. It's an incredible bull trend. The trend is your friend. There's no point in fighting it or overly fighting it. The way that I trade, I like to combine like a fact-based thesis with technical analysis with an understanding of market dynamics. And I've started to discuss with you guys here over the course of the last few days about how I'm getting a little bit nervous. The technicals here are still full on bullish, and that really has to be respected. But the market dynamic situation, I feel like, is becoming a little bit less favorable, and the fundamentals, I think, are actually becoming a little bit less favorable as well. And I was pretty bullish on fundamentals even when the market was making lows all the way back last October, even though a lot of the sell side analysts were still trying to be fundamentally bearish. By the way, that's $100 ago. And as much as I have a lot of respect for Marko Kolanovic, we were speaking about him in the VTF a little bit yesterday because he tends to be a real bull. That's basically when he switched to being a bear. He was bullish for the first half of the bear market in 2022 for sure. It was only somewhere in the second half of the year, I think, as we were somewhere near those lows, that he actually switched to being bearish. We're up $100 from there. And I still don't even fully disagree with a lot of the points that he's making. It's just that you have to respect the technicals. You have to respect the market dynamics at that price. No one was long. And the VIX started coming down and the systematic strategies started buying again. And then the hedge funds were more, we were talking about this in April and May. The hedge funds are more short than any other point since 2011. And we were wondering if we could break above, 4,200 in the SPX and if that could really trigger the next level of buying. And that's exactly what we've gotten here. The market is a heck of a thing. And maybe you want to have a fundamental thesis that is bearish. I totally get it. And at these prices, I'm starting to feel that way a little bit myself. But at the end of the day, it's your technicals that you need to execute off of. So we'll continue to monitor this market. I also think that we're not just gonna start selling off without some sort of catalyst that begins to come in. And I'm curious to see if the catalyst that halts this sick rally that we've been in actually is earnings. And we haven't really seen any real use cases for what I'm talking about yet with um with the earnings reports because it's mainly been the banks that have reported, and the banks are actually still relatively beaten up, and I think sentiment is still pretty sour towards the banks. So my expectation actually was that the banks could have decent reports, which is what I think Bank of America and Morgan Stanley were this morning. I thought they were decent reports. I thought they were good. Not like mind blowing, knock your socks off good. I thought they were good. But because sentiment was kind of sour on them and they haven't actually been on a big run, they were able to have big moves today. Morgan Stanley, massive move today. By the way, we talked about 87.50 as a long. I know Sharir caught it. I hope other traders caught it as well. Bank of America, we talked about $30 as a long for a breakout. Also, really solid move. But I mean, look where this Bank of America is coming from. It's still below the breakdown point from SVB. That's very different. The only real use case I have on the other side, and now it's starting to recover already, is the Delta earnings report, where Delta had a huge movement in the report and they actually sold it down. So obviously, big tech moves the market more than anything when it comes to earnings season. And from my experience, you should really never count big tech out. Um, they're tremendously powerful at making money, and they're smart for obvious reasons. And a lot of times, what you'll see even on like mediocre quarters is they'll pad that whole thing with, new buybacks, increased dividend, a stock split. We've seen all that over the years. The last earnings season that we had in the second half of April and the beginning of May, there was a couple points here actually where the market looked like it wanted to break down out of this consolidation, and the market felt very heavy, but it was big cap tech that actually saved it. That was, back in April and May. That's back when Apple was trading at $165. That's back when Microsoft was, trading at and this was the earnings report right here in Microsoft that helped save the market that day when the market looked like it wanted to break down. You had Microsoft trading it at $280. Now it's at $360. You had Meta. Here's also that earnings gap report, a phenomenal earnings report, and it was at $210. Now it's at $310. Um, Netflix, another one, just great continuation. This was at 320. Now it's at 476. Nvidia, obviously, this was one of the best earnings reports I've ever seen, so you can't count it out. The last April, last May, this thing was at 270. Now it's at 475. And obviously a lot of this, and I think very justly so, has to do with the AI revolution. But I'm just concerned. I really am, and I keep saying it over and over again, and I'll probably keep saying it until we get through earnings and we get Netflix and Tesla tomorrow. Tesla, by the way, another one. April, May, last earnings season was trading about $160. Now it's at $292. Almost doubling. I don't want to count these names in. Seriously, like the Apple buyback. I say it all the time. Whenever somebody wants to be short Apple, can you make money short Apple? Of course you can make money short Apple. Look at the pullbacks in 2022. Look at this move here over the course of however many months from $175 down to $125. Just go over to the YouTube. Um, from $175 down to $125. It's not to say that you can't make short money Apple. You can make money to the short side on Apple. Obviously, if you were shorting Apple over the period of 2022, you have the ability to do it. I'm just saying, do you really want to be fighting that? What do they buy back? Like $25 billion a quarter of their own stock when they're constantly forever on the bid? You can't count them out. And Apple, I saw this statistic the other day. I do not remember what the numbers were. You guys can look it up for yourself. But Apple at $180 in June 2023 is a significantly cheaper stock than Apple at $180 in January 2022, a year and a half earlier. And the reason for that is because they're just buying back their own stock. The float is continuously getting smaller and smaller and smaller. So it's really difficult to come in on the other side of these names. I don't want to count them out, but when I'm looking at this market rally that has just been extreme, and I'm beginning to see these like extreme foot squeezes, and the type of Carvana again as an example. I mean, first of all, Carvana was a $380 stock. You should remember that. It worked its way all the way down to five or so, $4, $3 off of that. Um, this company was placed for bankruptcy. It reported an awesome earnings report back here on May 5th. Path to profitability. Does it belong at 40 off of that? When you start to get this extreme level of the short squeezing coming out, I just begin to wonder at a certain point where that next level of buying will come from, and that is a market dynamic thing. That's not to say that we can't continue, right? Um, the biggest bubble I've ever seen in my trading career, and I started as a prop trader with T3 in 2010. So I didn't trade, like '06. I didn't trade 1999. The biggest bubble I've ever seen in my career was the end of 2020 into 2021. So and it was mind blowing to me. I have no problem talking about losses I've taken over the course of my career. I like to bring up Palantir sometimes. I got stopped out of a Palantir short for, I lost like 60 grand on it or something at, I think, $35 on the way up. And I was just like, this company is worth $10. This company is worth $10. This is ridiculous. But stock was going up. It was squeezing higher. It was just, the especially with the way options work these days and the gamma squeezes that can come off of it, you gotta be very careful fighting. And while I'm starting to get a little bit concerned about the market, and I'm concerned about the degree of the moves some of these names have had, I mean, Lucas Nyman, I've done extremely well in Roku. And I have this in the buy list. I think it's a buyout candidate. I really don't like the idea of being short it because I feel like at any time Walmart or Netflix could come in and just totally buy them out at $120 a share or something like that. But unless that happens, this move from where I had been trading it in the 40s and the 50s, as it rips up into $80 is becoming more significant. I mean, or Shopify. When this thing was in the 20s, I was buying it with both hands, the 20s and 30s, doing really well to the long side. I no longer have a position in it. There was a great earnings report from this company as well back in May, but now we're talking about another one here that has doubled over the course of a very short period of time. But the point that I'm trying to get across is the market technicals are extremely bullish. You don't want to fight them. I think that if anything is going to stop this uptrend, it has to be some sort of bigger picture catalyst that stops it. That bigger picture catalyst could potentially be earnings, even if the earnings reports are okay. Like if they're all, let's just say, in line, the market might end up selling that just because the move has been so big on these AI expectations that maybe we get that pullback. But until that actually happens, you gotta keep fighting this uptrend. So for me, the big picture thought process has more just been doing things lighter now. Doing things lighter. Great first half of the year. Let me do things lighter. Let me play a little bit play a little bit of defense. Let me focus on some day trading for some cash flow. Probably have made my life a little bit difficult with some of the shorts I've tried to put on over the course of the last week or so. Even though I've generally done well with them, I lost a little bit of money in Coinbase short today. I'm really curious to see what this earnings season looks like, and I'm pretty nervous about it actually. From a bullish perspective, I'm nervous that um, if there's not blowout quarters from some of these names that we just went over. Again, Meta, I thought it was obscenely cheap at $100. But Meta here now that just since the last earnings report has come out has ripped from 240 to 315. Are the fundamentals that come from this earnings report when Meta reports, which I think is next week, but fact check me on it. Are they going to be able to justify this next leg that we've seen in this stock, which has been another $80 to the upside? And you can go through all these names and do the same thing. And if they're just in line, it might not be enough. It might be a Delta situation, even though Delta's begun to recover. Do an earnings report, they gap it up, and then they totally sell it off. So we will see how that all plays out. The market technicals are just extraordinarily bullish. They can't be counted out. I'm not counting them out. I'm still, you know, pretty much entirely long focused. Though I do have some T triple Q short tonight because the Qs started to get to that $10 of extension again from the ADMA on what's just been an incredible move. From a trading perspective, for just the day to day, we talked about Morgan Stanley 87.50 worked great. We talked about Bank of America $30 worked great. Assuming you were able to get stock, I don't think it was tremendously easy. My disappointment of the day was Teladoc. It seemed like a lot of short squeeze names were squeezing today, which is exactly what I wanted. 15% short float in it. Had some AI news. I was able to get stock pre-market at 26. Got paid pretty decently in it. My best sale was like 27 quarter. But they ripped this thing all the way down. Tried to create that pivot point into the ADMA, gave a good bounce off of it, and then totally failed. I got stopped out of my position when this low broke here. I made money in it, but I also gave back a lot of open P&L and was disappointed with the final result in it. I did trade a little bit of Amazon to the long side, small, made a couple bucks in it. Um, Bank of America, I traded the earnings report a little bit on it, made a couple bucks in it, nothing huge. I got out of my Roblox swing today. I know some people were looking at Roblox 45 for continuation. That was a pretty difficult trade. I tried to short this Coinbase. We talked about the inside day yesterday, and that this could be either a short or a long, depending on the break. And as I was trading it, it looked like if it could break through 104 early this morning, I could have got a nice downside move. The flip side is it broke this consolidation to the upside and absolutely exploded to the upside. So the stop that I was using, my stop loss was to be this 935 high of 105.92, but I did keep some stock. Just I wanted to keep a little bit just in case it was like a push through failure through 106. And I absolutely ripped this thing all the way down to up to 110. Was able to short some more up there and kind of recover the position a little bit. Um, but then I kept it tight on the way up here. I got stopped out on this bounce and then ended up losing a little bit of money on that. Ended up losing a little bit of money on this Ion Q, which I just didn't trade it well, which is totally my own fault. There was no reason why I should have lost money in this. I literally just did not trade it well. And I made a few bucks in Baba. Shout out to Rock on that. I just kind of saw this candle come in here as Rock called it out. They were super beaten up. $90 is an important daily spot. I really like this 5 minute candle. I know it's downside grind, which is very hard to buy, but you got a little bit of a volume pickup. They were snapping it right into that ADMA. I thought that they were going to try to make a real push here in this thing, and I was right. So I was able to get some stock. $90 is a big daily level. So I was able to get some stock down there and have a pretty good day trade on that one. Um, so yeah, net though, nothing really to write home about with my day trading, and my swing stuff was frustratingly mixed considering how strong the market was. And was able to make some money short teacher book Q into the close and kept small. I kept small because I recognize that tomorrow morning the ADMA on the daily chart is going to be a little bit higher. So unless we have like a big gap up tomorrow, we're not going to be $10 extended from that ADMA tomorrow morning. So big gap up tomorrow, I'll be adding. Gap down tomorrow, I'll cover my short relatively quickly. Flat open, I'll manage the position. And it hedges my longs out a little bit. And that's it. Sorry about any sound issues in the VTF. I thought I had that problem fixed. I don't remember what's going on, but I guess the YouTube is fine. So people can go over to the YouTube. And if more people are watching the YouTube than usual, you know what to do. Give it a thumbs up. I'm happy to answer any questions anybody has. First from Rex. When swinging a stock and the stock gets very extended on the daily, instead of selling some of the stock that we were holding, would you open a protective put, long put equal to the size of the position that we were holding better? I understand that it would be difficult to do so for intraday. However, when coming into a swing position, what is your view on paying a tiny bit of premium to get the downside protection, but also keeping the potential for the upside with as much position? Um, First thing I'm going to say to you is that you're better off directing that question to Pat over me. Pat, or I mean, there's a bunch of people in the VTF, honestly. Brant comes to mind as well, who are just honestly much more knowledgeable about options than I am. Options are not my area of expertise. I don't trade them, but as I mentioned in the VTF earlier, with what I just talked about with earnings, I know this is straying away from your question, but what I just talked about with the move into these earnings reports, I'm actually thinking about for the first time in my 13 plus years at T3, actually adding on options into my account for this earnings season to do some pure gambling bets. And I'm recognizing it and I'm saying it, gambling. That's the word I'm using. Pure gambling bets on sell-offs in some of these stocks that have had these massive moves into their reports. So I'm thinking about adding that on. But I know that that's one way that you could protect yourself. I can tell you that's not the way that I've ever traded Rex. Um, when I'm looking at extension like that, I just basically am assessing to myself, or I'm asking myself the question. I'm assessing: is it worth it to give it back potentially to the last pivot low? That's where my current stop loss is, to look for that next higher low and where that might come in. Is it worth it to endure that P&L pullback to be able to maintain the swing position for higher highs and higher lows? And if the answer is yes, then I do it. If the answer is no, I liquidate some or all of my position. I look to rebuy it back lower. Sometimes what I do is when the market itself gets extended, that's when I begin to um, that's when I begin to um, piece into like an index related short, um, which hedges out kind of the whole portfolio to some degree, even though I do it as a trade as the market is hitting those higher levels of upside extension. So that's all I got for you. I see Pat here is giving you a little feedback as well, so I would definitely read what he has to say about it. Um, Also, would you mind to take a look at my trade for today? Today I traded Netflix at 9:35. Wow, Netflix super relative. Oh, it's yesterday. um, Netflix is still very relatively strong this morning compared to what the Qs were doing. We got that inside. I called this out. This inside five that came into Netflix as Netflix was acting relatively strong. Oh, looks like that trade failed for you if you were in it. Um, Excuse me. Netflix got an upgrade to $500 by Wells Fargo. Okay, so that's where the relative strength came in. It was relatively strong at the open. It was holding above 450, which is a daily level. It was the least extended on the daily chart compared to the other large stocks. It turns out that it failed when at 10:20 Netflix bounced back. So I mean, first thing I would say about that is it's fine. You know, trades fail. It just is what it is. You were looking at the right things. I like the idea. I like the trade. I think I called it out myself, and it just didn't work out. Next part of your question here is then at 10:20, little inside five and up. Netflix bounced back to the day high and consolidated a little bit. Still relatively strong with their stocks. I tried it at the 10:20 inside five, but I got stopped out again. Ooh, did this tail push you out? That stinks. There's nothing you can do about that. The only thing you could have done, I was talking about this with inside five continuation trades. It's not wrong to use the inside five bar low as a stop loss. I prefer on inside five continuation trades to use the trend continuation trades different than a momentum continuation. If I'm looking at an inside five for momentum continuation, I really prefer to use the inside five bar low as my stop. When I'm looking at like a pivot low trend continuation inside five, that the low is basically in equilibrium, I actually usually prefer to use the actual pivot low compared to the inside five low, which would have given you 20 cents extra risk. In that case, it would not have stopped you out. I don't think that you did anything wrong. I think that this tail here that's on the 1030 bar that pushed you out, it easily could have tailed another 10 cents and pushed you out even if you're using the pivot low also. So I don't think that there is anything that you did there that is wrong. It just you chose to use the inside five stop loss and it tailed down and it pushed you out and the market continued. Um, I'm trade like that, would you factor more? It's a common gap up and more likely leads to selling at the open, but it already filled the gap. The gap was already filled. So any concern about that, I think is not a concern anymore. The gap was already filled. And I become much less concerned about a gap fill when the ADMA catches up anyway. I think you did everything right. The trade just didn't work. I got like the hiccups because I ate that street meat too fast in between 4 and 410. Um, from Cameron. Can you talk about how you manage your day trades that you swing into the next day? Are you keeping the original stop? Yes. What are you looking for the next day? So for me, a lot of my swing trades will start as day trades and then they close well, and then I look to keep them overnight. That's a lot of my focus on what I do. It puts you in the win-win situation. It lets you enter trades based on 5 and 15-minute risk to look for a daily chart time frame reward. That's what I love. I think if you are going to take the risk of keeping a position overnight, and it certainly is a risk, you never know when news could happen. It stopped. Hopefully, you have a big enough of a profit cushion where it's a very low probability. let a gap past your stop and you lose more than you were planning on risking. But it is a possibility when you're keeping a position overnight that news comes out that was unexpected that causes some real damage to the name and hurts you. So for me, if I'm going to be keeping that position overnight, I'm really looking for much bigger picture reward. So though, like I don't want to see people like continuing to use like a 5 or 15 minute chart trailing stop on something that they kept overnight. It's not worth it. You would have been better off just closing the position out the night before and not taking the overnight risk. So what I do when I keep the position overnight is I commit to using the original stop loss from the original trade until and unless I can get a higher high, higher low with ADMA catch up, aka confirming all three of my trailing rules, but happening on the daily chart. And then I will raise my stop loss and I will use daily chart stops for that. So I hope that helps. Appreciate the question, Cameron. Let me see if there is anything over on the YouTube. What's up, everybody? Hey, Robert. I just remembered the other day that I wanted to speak to you about something. If you could shoot me an email, Robert Dragonovsky, please. I'd like to chat with you about something. Um, I don't know if it's information I provided you already or not, but I was just thinking about you. From James John, SPY near 20% from the 13th March low. Potential profit taking from investors. March 13th low. I'm not sure what you mean by 20%. You just mean 20% up? I'm not sure. I'm not sure it necessarily works like that, just on percentages. But I do think we're getting a little bit cooked to the upside. From Mike in the VTF, went long Goldman with a buy stop through 327.50. Sorry, Mike in the YouTube. Went long Goldman. Wow, Goldman had a day today. Moved as a secondary, I guess, or anyway, through 37.50 level and yesterday's high. Nice. Stop was below that 5 minute candle. Perfect. It worked great, but I struggle when the trigger is so quick. Those are my favorite trades. I took with execution when it moves so fast, just overall game planning and mental scenarios. Yeah, I mean that's pretty much it. You just need to be fast on your keys and you need to be well prepared. So if the preparation is what makes you confident to be fast on the keys. So you gotta be able to be fast on the keys. If anybody's ever seen me trade, you see that I have the ability to put in multiple limit orders at different prices per second with how quick I am with my keys. Um, and then the other thing is that you just need to be confident, and confidence comes from preparation and game planning. So that's it. Yeah, you mentally prepare yourself, you game plan the trade, the execution is there. You just need to be quick on the keys at that point. So that's pretty much what it comes down to. And those are my favorite trades. My favorite trades are those super fast ones where you get one opportunity to get stock and you're either fast enough to get it and you got great stock, or you were not fast enough to get it and you missed the trade and you never get another opportunity. And when I can get stock in those scenarios and I see that no one else is able to get it, see, when you see that no one else is able to get stock, you know you got good stock. As kind of a general rule. All right, cool. Looks like I got through the questions in the VTF and in the YouTube. If you're watching in YouTube, press that thumbs up button for me. Have a great night, everybody. I'll see you all tomorrow.